with market high volatility like we've seen today and all this week actually. The Nasdaq today was down 4%, and then and then it came down. It came down a little bit. Now it closed at 3. We've seen S&P 500 almost to 2.5%. The Dow was 225%. And then all this is because is the Market Watch. This is the website I'm on right now. It says stocks could face another explosion of volatility Friday, which is tomorrow. Of course, the market crash. As 4 trillion of options expire in quadruple weighting, which is a Friday. It happens usually every quarter of Friday, every fourth Friday of end of the month, which tends to people sell this option. They have to cover, right? So and then market, of course, usually that happens, and the market will see that kind of volatility. So the other option, you're going to say, well, either you're going to stick with that kind of market, and for long term you should be okay with of course Nasdaq or S&P 500, or there's another route you can take, which is to go to what we call covered call ETFs. So this type of covered call ETF are pretty much what they do pretty well when the market is very volatile, because they buy and sell. When the market gives volatile, when the market get so volatile like this is their time, because they sell a lot, and also they have little potential of that hedge. It helps them from not falling as overall stock market. So we have two type of those. We have either closed-end funds with options, or covered call ETFs. So today, actually, I'm going to talk on one of the highest yielding closed-end fund here in Canada. So we'll see which one it is, and how much they pay, what's their fees, and how long have they been paying, because that's important, because that's your money at play here. So if it's your first time on this channel, this is Mr. Moneyman channel. On this channel, I talk about money, investing, news, and anything related to your money, because that's important on this channel, and that's important for you, I believe. So let's go and see what fund it is. So this is a fund I'm talking about. This is a Dividend 15 Split Corp, right? So let's look at the overview of this fund, what this fund does. Dividend 15 Split Corp is an investment corporation designed to pay monthly cash dividends. The corporation invested primarily in a portfolio of 15 dividend yielding high quality Canadian companies. There are two types of share. Of course, there's A share and preferred share. So on the purpose of this video, we'll focus more on A share, because the preferred share is more of like a bond. You get very low yield, but it's more safer, because when the fund, if ever closes, you are the one who get the money first, right? So and these are the company core holding. We have Bank of Montreal, Bank of Nova Scotia, BCE, CI Financial, CIBC, Bank, Enbridge, Manulife Financial, National Bank, Royal Bank, Sun Life Financial, TELUS Corporation, Thomson Reuters, Toronto Dominion Bank, which is TD Bank, TransAlta, this is airline, and TC Energy. So we have some energies, we have some banks. Objective of this particular fund, so we have two types, of course. Preferred share, this is the objective of it, but we're not going to read that. We're going to Class A, because this is our focus. So Class A share, the objective of it is to provide a holder of Class A share with a regular monthly cash dividend, initially targeted to be 10 cents per Class A share, to yielding of 8% per annum, right, on original issue price. So their target is 10 cents, which equates to 8%. But the thing is, because right now the market has fallen, so that yield would increase based on the share, how much a share falls. So if for right now, for example, it's about 15%, because the market has crashed and the share, they came really down, right? Is price at 7, yield is 15. 52 weeks range is about 7. 52 week range was about 636 to 883. So it's pretty good. But we look at this is 120 a year, which is 52 percentage of point right now. So it's pretty good. You know, as the share price comes down, the yield goes up. That's how it is. And the share price goes up, the yield, of course, fall. That's just a regular for any other dividend paying stocks too. Same as bonds as well. Okay. And the point number 2, on or about the termination date of December 1st, 2024. So termination date is, they have a termination date of, like, you know, when the fund is going to be terminated, you know, and then in that case they're subject for renewal, right? It's always been this case. It's always has termination date and renew again every 5 years, I believe so. Subject to a further 5 years extension thereafter. So after 2024, they're going to renew again. It'll be 2029, which I doubt. I mean, I don't doubt, of course, they will renew it, you know. And, you know, their objective is to pay holder of Class A share, at least original issue price, you know, at those share. So in case of they close, they would pay your, you know, the fund, if it's not renewed, they would pay your money back, right? You know, I mean, at least close to that price. That's the objective. Class A share, of course, pay monthly cash dividends. Share highlights, they pay monthly dividend. Quality investment and diversification, leverage to performance of high quality stock, capital appreciation potential, attractive alternative to other income. So I'm gonna talk a little bit about the 2 points here. Leverage to performance. So what happens is, of course, once you put your money in there, they do have some sort of leverage to kind of borrowing. You know, that's a big banks, they do that in order to leverage you to have more buying and option power, so they can pay you as the dividend. Capital appreciation, of course, you might appreciate, because, for example, in coronavirus, it was $3 and it now is about $7. It went all the way to $8. So there is a potential of that. Attractive, okay, alternative to other income vehicle. Of course, you know, instead of dividend income, you're gonna pay dividend stock, you'd get about 2 to 4%. This one you get about 15%. Top holding, we've seen there. These are holding sorted by weight as of November 30th, 2022. So the Royal Bank is number 1, Toronto. TC Energy, Bank of Montreal, BCE, which is telecom. Manulife Insurance Company, Enbridge Energy Company, Canadian Imperial Bank is a bank. Sun Life is insurance, which is financial. Bank of Nova Scotia, bank. Thomson Reuters is it's a media company. National Bank of Canada, bank. TELUS, it's a media or telecommunication. TransAlta, TransAlta, of course, this is energy company, and Emera, which also is energy company. Valuation November 30th, 2022. Distribution, it's 14 cents. This is 14 cents, include 10 cents of regular share A, and preferred share of 4 cents and 58 cents. So becomes to 14. When you look at the very important number is the NAV, because this NAV has to be above 15% in order for them to pay dividend. When it falls below that, they won't pay dividend. So we look at the NAV. Total distribution paid to date is 51, but the price of NAV after distribution is 16.19. So we are safe right now before it actually fall. With all this market volatility, we still really good, because the market has fallen so far this year, but we still have 19%, 15.19. So that's really good. Let's look at the distribution, because that's the important thing. Where we invest in this, we invest in this fund because we need cash. So let's see history. Are you going to pay money? Is there any guarantee of money? We look at the distribution here. We come to distribution, we'll see this fund has been paying for many years. Of course, that was, if we look at the history back, you can go to this website, Quadrovest, and you can see how long they have been paying dividends. And we can see, let's just go from 2018. They haven't missed, from 5 years. If you look at the 5 years horizon, they haven't missed much. The only time they miss, as of my knowledge, was 2020, during COVID crash, they you can see here they missed zero. They didn't pay March, April, May. They didn't pay, and they pay again, and then they missed again in October, and since then they haven't missed any. So that's it, and they pay 10 cents. So it depends on how much you put in. So it's a pretty good. They had good history. They've been paying for over 10 years. So I don't doubt that they'll keep paying this for long term, for the foreseeable future. And if you want to more about prospectors and everything, the documents and all that stuff, and how much they pay, you go into details. You can go to this website, Dividend 15 Split Corp, and you can go find document. And one of these documents here, it report that it gives you how much they've paid in taxes, how much they've paid in return of capital versus income from dividends, and so on. So that's it about this fund. What do you think about this fund? Do you like it? And again, if it's your first time, please subscribe and hit the thumb up button. We talk about finance. That's my mission. Thank you very much for watching. Till meet again. Bye bye.